Ladies and gentlemen, what if I told you that last night futures for the NASDAQ and S&P were down about 2%, but today the S&P actually closed red 0.67%. Fine, we had a bit of a recovery. But what if I told you in pre-market trading right now, the S&P is up 0.64%, meaning we're almost break even. Following some of the headlines that we've seen in the last 24 hours is quite remarkable. Here in this video, I will share with you what the news is that is causing markets to rebound so sharply. And it is effectively the trade war is now over. It is official. Canada has made some concessions and essentially caved in order to have a 30-day extension of when Trump's tariffs will be going into effect. Here is the latest news. Canada's Prime Minister Justin Trudeau, I should say outgoing Prime Minister, says, quote, "I just had a call with President Trump. Canada is implementing our $1.3 billion border plan, reinforcing the border with new choppers, technology, and personnel, enhanced coordination with our American partners, and increased resources to stop the flow of fentanyl. Nearly 10,000 frontline personnel are and will be working on protecting the border. In addition, Canada is making new commitments to appoint a fentanyl czar. We will list cartels as terrorists, ensure 24/7 eyes on the border, launch a Canada-U.S. Joint Strike Force to combat organized crime, fentanyl, and money laundering. I have also signed a new intelligence directive on organized crime and fentanyl, and we will be backing it with $200 million. Proposed tariffs will be paused for at least 30 days while we work together." So essentially, the trade war is canceled or delayed, maybe canceled entirely. There is also news that Trump is going to be having a call with President Xi of China in the next 24 hours, in which I imagine there is going to be something like this also announced by China. I doubt China is going to work as fast because perhaps it's not as big of a priority for China, or they don't want to seem as weak as Mexico and Canada. But essentially, the trade war is now over. This is the news in after hours, if you were curious, causing markets to absolutely explode higher. Now, we also have some news as well that I think largely went unnoticed. All things equal, I think this is big news. President Trump signs executive order to create a sovereign wealth fund. What is a sovereign wealth fund? It's a fancy way of saying the United States government is now going to buy and hold assets. They can buy and hold Apple. They can buy and hold Google. They can buy and hold Applied Digital or Nebius, some of the new stocks that I've recently been acquiring. They can buy and hold Crocs. They can buy and hold Dollar General or Walmart or Costco. Really whatever they want. And all things equal, if we had not gotten these crazy headlines, I think markets would be reacting to this very positively. In theory, a sovereign wealth fund could also invest in crypto and in startups and venture capital firms. This, I would say, is a big positive. Now, we've seen sovereign wealth funds in the past be kind of a headache when it comes down to corporate decisions. For an example, if the Saudi wealth fund owns Lucid, which they do, a majority stake in Lucid, they essentially make the decisions. So you have the Saudi government that's making decisions for a company. Well, a United States sovereign wealth fund could theoretically do the same with another company. Now, this, I think, broadly speaking, is a positive. I don't think there's no other way to express confidence in U.S. financial markets than the United States government owning the financial markets in which U.S. companies are largely based. I would say this is a big positive. Long-term holders, right, are typically sovereign wealth funds. And let's say theoretically the U.S. goes out and buys stocks. They're essentially reducing the outstanding float of shares outstanding. And if they're going to long-term just buy and hold these stocks, well, how is that a negative? I would say that is a big positive. And I think this is some news that is going to be talked about a lot more in the coming days and weeks that should be reiterated as positive for U.S. equities. So with that said, markets are rebounding. quite a bit, including big tech. Nvidia is up 1.4% in after hours. Tesla's up 1.5%. Apple's up 0.5%. Meta's up 1%. Google's up 1%. Microsoft is up 0.5%. And Amazon is up almost 1%. So it does seem like this delay or canceling of the trade war seems to be a big positive for markets at this point. With that said, we do have big economic data coming tomorrow morning, in which I think will be heavily focused on, especially considering some of the headlines that we're getting tonight from Fed Goolsbee. Fed Goolsbee says, quote, uncertainty warrants caution on rate cuts. Warns inflation could rebound, impacted by fiscal policy and strong consumer demand. Notes challenge in distinguishing overheating from one-time tariff effects. Says business leaders, including automakers, express economic concerns. Not inflation concerns, but economic concerns. And I think tariffs are a bigger economic issue, weighing on GDP and countries' ability to continue to grow rather than actually being a negative on inflation. So, canceling the tariffs in a weird way is canceling what could have been some disinflation. I know people are going to disagree with that, but that is my opinion here. So the Fed, like other Fed speakers earlier today, really say they want to continue to see progress on housing before they continue to cut rates. Now, the next Fed rate decision is going to be in March. And as long as we continue to see progress on inflation, we will most likely be getting a cut from the Fed in March. And I would say that's probably going to happen. Right now, there's only a 14% chance of a cut March 19th and an 86% chance of a pause heading into March 19th. But I will have to say I'm optimistic on progress that we will continue to see with inflation. Now, some big news as well today in after hours. Fan favorite Palantir, seems like it's one of everyone's favorite companies, is up over 22% here in after hours, following what Palantir says in their 10Q filing today with the SEC. They eviscerated, literally, I've never seen that before. A company say they eviscerated Wall Street's expectations for revenue and other profit metrics. So yeah, the stock's up 22%. And Palantir is seen as one of your pure AI plays, is going to have an impact in bringing up the rest of your AI stocks. And I think this, in conjunction with Canada's prime minister essentially folding and the trade war essentially being canceled, is all leading to a more optimistic, more positive market here in pre-market, and what could lead to a nice recovery tomorrow. Now, tomorrow morning, we will have to contend with some economic data like JOLTS job openings. I explain this a very simple way. If you are, let's say, a small or medium-sized business and you're looking to hire a bunch of employees, well, your business is probably doing well. If you're looking to hire, it's a good sign you're doing okay. If you're looking to hire 10 employees, you're probably doing better than if you're looking to hire 2 employees. That's a fair assessment, I would say, and most people would agree with that. Well, if you slash that, if last month you were looking to hire 10 and now you're only looking to hire 2 employees and you haven't hired anyone, well, that's probably a bad indication for your business. That's essentially how Wall Street looks at job openings. Okay, last month we were at roughly about 8.1 million job openings. We're expecting around 8 million job openings. So a decline of about 100,000 job openings month on month from December to January. We will see, especially as you are now out of the Christmas holiday, season, if we do get a big drop, if we see a big rise, that's going to tell us a lot about the state of the labor market and the economy. It's definitely something the Fed pays attention to. Now, factory orders month over month are expected to decline negative 0.8%. Last month was negative 0.4%. So a big decline expected there. The economic optimism index expected to rise to 53 from last month's 51.9. Fed Bostic will be speaking tomorrow, as well as Fed Daily. And we want to see what they have to say about JOLTS job openings, whether or not that indicates a weakening or strong labor market. Any weakening here could likely open the door for the Fed to be a little bit more dovish. And I mean, after all, Trump called on the Fed to start lowering rates. So I think they're going to be looking for any excuse or reason they can to start turning more dovish, to start opening the door for more dovish and easy Fed policy. Something that I also talked about in the previous video today was the reverse repo market. You're now down to $97 billion of reverse repo agreements today, or purchases today. That is down from $187 billion on January 31st, the last reverse repo operation that we had on Friday. That is cut in half, 50%. From Friday's number. That means liquidity could be starting to dry up. Now, these numbers can be kind of weird because sometimes they go up, sometimes they go down. But if this does start a streak of these numbers falling, pretty soon here, we could see an end to quantitative tightening, meaning the Fed may stop rolling off some of their bonds and stop reducing the pace of their balance sheet runoff, which could lead to some downwards pressure on 10-year treasuries. Okay, which is largely what the U.S. economy is based off of, or as far as lending standards. Now, tomorrow morning, we will have earnings from PayPal, Spotify, Pfizer, Regeneron, Pepsi, Ferrari, Merck, Estee Lauder, Apollo, and Enterprise Products Partners. In after hours tomorrow, we have some big heavy hitters. You have AMD, you have Alphabet, better known as Google, Snapchat, Chipotle, Enphase, Amgen, EA, Lumen, Prudential, and Juniper. And then throughout the rest of this week, you have Uber, Walt Disney, Novo Nordisk, Toyota, Boston Scientific tomorrow, Wednesday morning, Ford, Qualcomm, ARM, Symbiotic, Wednesday and after hours. Thursday, Eli Lilly, Roblox, ConocoPhillips, Peloton, Hershey, Bristol Myers, Tapestry, and Yum. And then Thursday and after hours, you have Amazon, Elf, Cloudflare, Affirm, Fortinet, Microchip, Pinterest. And honestly, so far, earnings season has been pretty good. So as long as we don't get a big disaster coming tomorrow with PayPal, Spotify, AMD, Google, markets could recover quite a bit here. If earnings are anything like Palantir, markets are gonna be in for quite a recovery, because I think a lot of Wall Street in the past couple of days and really last week or two has kind of set aside earnings as being a catalyst or something that we should pay attention to. And earnings season has been much better than expected across the board this quarter, and the guidance has been really good for full year expectations from companies. And that's really at the bottom line, end of the day, that's what the markets care about most, right? And we could, over the next couple of days, start to say, well, earnings are actually justifying this market. And that could be another big reason to send stocks higher. So let me know what you guys think about this information down below in the comments section. Have a fantastic rest of your day, and I will see you in the next one.